Okay, going long, and that means putting in an order before the market opens to go long. So we're using the daily Robo system too. So we're buying above yesterday's previous high, and we're putting a stop below the yesterday's previous low as well. We also want to put in a separate order to take a percentage profit. So let's go ahead and do that. So I like to have my GFT page having an order page where I have my working orders just behind here, and then you can see down here open orders down here, and I keep this little explorer here to find stocks. So if I was looking for Australia equities rather, then we'll be looking at equities Australia under Spain, and then I just, instead of scrolling down, I just normally put we're looking for NAB, so I just type NAB in there and it pops up. So then I right click on that and go to new order. And in the new order, I'll just put this back down here in that little posse there, and then we're looking at this order through here. So if I just start from the top here, then we're looking at, we need to always start from the top, always check that you got the right stock in there. And then what we're looking for here is we want to buy before the market opens, so we want a parent and contingent order. So I'll just move that up there a little bit. We want to go long, so we want to buy on stop. And in fact, if we're selling, we'll do the same thing as sell on stop. But here we want to buy on stop. So the price here that we're looking at here is 25.42, just above the medium level there, which is nice. We want to put a stop under the medium level. Medium's 25, so we want to put a stop there at 24, keeping it a little bit lower here at 93. Such 97 could do the trick, and that's it. Now, if I was taking all my profit at a particular point higher up in the market, then I would use this limit order here. But I need to take a percentage of my profit, so we can't use that one. So I'll take that off and take that off. And then I need to work out how many CFDs I can buy. It's very important using the Robo method that you use only risk 1%. So if I had this account here where using the GFT NAB here, I put in my entry price here, going long. I put in how much I can risk here. So if I've got a $30,000 account, I can risk or $300, and then I put the stop loss in here, and it gives me the quantity of shares. So if this was, if this was 90, then that would change as such there. So that's that stop loss there. So we know we can buy stop loss at 24.93. That's all check. That's all good. So we've got 612 of them that we can buy. 612 in there, and then we hit submit through here. It'll give you a little window just to check. It's always good to check, so just make sure that you got 612 at 25.42 and covered at 24.93. So that's all good to go. Now that will go straight through and pop up into the working orders here. So you can't see that, but these bottom two here have got the buy order here, which is the working order, and then it's got the stop child contingent order there. Now we want to take a profit along the way. So because the idea with short-term trading is to get to break even as quickly as possible, but not to move the stop up too quickly, because that's technically not right. You want to be taking a profit at the closest largest number. So what we want to do is we want to put in a new order here, and this new order is going to be a limit order, and this limit order is a separate order. So if the other stop gets filled out, then we have to remove this remove this order from the working order section. So here we want a limit order, and we want to where are we? What are we doing here? We want to take it 2,600, so $26 rather. Here we'll take 30 odd percent, so we'll go for 200 here, and we just want to sell. So it's a limit order to sell 200 at $26, and always check to see if you've got NAB up the top here, your stock order in there, and then you hit the sell there. And once again, you'll get a order coming in here saying confirming, and it's always double check. and that's fine. So sell, and that will go through, and then that will go in there, and that's it there. At 26, a limit order working. So that's it. I do want to show you just one more little thing why I recall this here. So if I go into new order again, and we get an order here, then because we're using a market maker here, all the charts are set on the bid price. So there's a bid and ask price, as you can see here, the bid price and the ask price. So they're always set on the bid price. So you need to take the spread into consideration. So the market's not open at the moment, but normally you just press on the price activity here, and you'll get another little window coming up through here, and you'll see the bid and the ask here. Okay. So there's only 1 cent difference through here. So, but you need to calculate that into the order. So if I was going long, instead of having it at 25.42, I should put it in there at 25.43, 1 more cent higher there. Okay, so you need to take the spread into consideration when you're obviously buying long, because you'll be working with the ask price there. It'll be triggered on the ask price. Yeah, so just take that into consideration. Alrighty, I think that's that. Thanks for listening.